Okay.
And how are you, bro? It's been a while,
I'm
bro.
good.
It's tough finding you, bro. You very busy man.
Yeah. Right now we are in the field. We are doing some field research, so it's quite hard to fix to have something on my schedule, but I had to make time for it.
Thank you so much, man. Thank you so much. Thank you so much. Yeah. So, yeah, man. So my name's Ephraim, and I'm currently in Paris right now, and I'm also a builder, and I love connecting and getting to know the people in the ecosystem. I'm Anthony, and so, the East African, the Kenyan market, the Tanzanian market are the markets that were really into my heart, and I'm passionate about that market to really understand it, to understand my people. And for the past, I think, few months, I've started going out and about, trying to connect with different founders. I've started in the western part of Africa, Nigeria. I've done Ivory Coast and some few people around the western area. And now I in this part, wanted to really understand the eastern part. So
Okay.
I've talked to the likes of, I don't know if you know this guy called Kevin. He's the founder of Oye. He works in the financing, in the border financing market.
Oh, okay. No.
Okay, yeah. So he's doing a very good job.
Okay.
But I was more interested to you and to your product because it really touches. Okay, so I have few fundamentals that I really believe in taking part, and it's like a philosophy to me. And I really believe in financial inclusion, meaning like finding different ways with the use of technology to really help people invest, save loans, and also just move in that financial ladder. And what you're doing is very interesting, and that's why we're here today. So welcome so much. Yeah.
Thank you. It's a pleasure. When you reached out, I thought it was quite interesting. Getting to know people around the industry that you're in is very, very important because that's something
Okay.
that you have also realized. There's a lot to learn about the industry, so everything is welcome.
Okay, so thank you so much. Yeah, but just to kick start everything. Yeah, I really want to understand you. Just for a short story, give me a story about you and what led you to do what you're trying to do right now.
Thank you. So my name is Francis Onyango. I come from an agricultural background. I observed our families, basically everybody in our family was involved in agriculture. So our parents were very, very productive economically because they use agriculture to pay for our school fees and also to bring food to the table. But they struggled too much to access appropriate finance. So the common explanation was that farmers are too risky because when they approach the financial institutions, they are told that they do not have enough data for them to be assessed. It's risky. But I came to look at it closely. For my undergraduate, I did economics, which opened my eyes a little bit towards the financing.
When did you study in economics?
Yeah, I did economics and finance for undergraduate, and then postgraduate I did a master's in data science. So the blend between the two courses, it sort of opened my eyes into the reality that there is, because the problem is not that the farmers are too risky. The problem was that there's no enough data to assess the risk that these farmers carry. You find that a farmer's years of production experience, they are very, very consistent in what they buy, they're consistent in the production, they are part of cooperatives and also circles, but they have very little evidence of the evidence that is there is not organized in a way that can be used by the financial institutions. So this leads to them being excluded from this formal financing. This became something from an observation because it was a problem that hit close to home. I was able to see the problem that was there, and then I said that why not use what I've learned in school? I have this expertise in economics. I have background in data. Why not use this data now to bring this gap on farmer finance? And that's what came to be of Mkulima Score, what you have right now.
Okay, nice. For how long have you been started? Is it your first like venture?
No, this is not my first. This is not my first innovation. The first thing that I embarked on was called. The company was called Ecosphere Analytics. Ecosphere Analytics was still agricultural. I wanted to help farmers increase their yields by giving them better insights based on the data that was being collected from their fields. So with Ecosphere Analytics, we are collecting farm level data using sensors and also IoT devices. We had some algorithms in place that was being used now to generate insights from this data. Then we were giving the farmers these insights now for them to make better decisions. So this was something that it was a very, very good idea. But now the problem that was there was the commercialization part of it. You'll find that the farmers in East Africa, in Kenya specifically, they know that they need these insights, but they don't have that capacity to pay for them. So it sort of hit a wall. But it's something that we are planning to integrate into Ecosphere Analytics because we have this data. We can give farmers better decisions. Even if they are not paying for it, we can just help them make better decisions.
Yes. So I study economics too. I study economics and finance in my bachelor's degree. And right now I'm about to do a master's too. Okay. And also I'm really fascinated on how data can cause decisions. Small businesses really understands them. I think I was more interested to you. But let's go back to the basics. Okay, give me what's the business model of your business?
Yes. Maybe I'll give you a little bit more of an understanding on what Mkulima Score is. So Mkulima Score is building a credit intelligence infrastructure for agricultural finance. We help banks, circles, microfinance institutions, and other agricultural lenders understand farmers whose economic activity is real, but whose maybe information that they generate is fragmented. Formal. Some of them are very, very invisible within the conventional credit systems. So farmers plant, they harvest, sell their produce. As I would say, they transact through mobile money. In Kenya here, we have M-Pesa, which is very, very prominent. But this activity is not being translated into some usable insights. So we collect this data from the smallholder farmers.
Data. There's a lot of data points, but it's not digitized. Now, I'm really interested to see what type of digital data do you have, and also what's the collection of this data? How do you collect? Do you have agents who go directly to the small businesses, or you rely on self-reporting from this small businesses? Is the cleanliness? How proper is this data that you're trying to rely to? Because essentially, this is type of data that goes to create financial decisions. So it's really a very sensitive data.
A very good question. There's a lot of fragmented data in agriculture. So mostly in agriculture, data is so much fragmented because you find that the smallholder farmers, for example, they operate in the informal system. So much of their data is not digitized at all. You find that there's a lot of data that they generate, but it's all over the place. So now the challenge was to put this data in a structure, in a pipeline that can be consistent, can be used consistently, and can be reliable. And now, given that our solution is highly dependent on the quality of data, we had to have high quality data. What we did is that let me dial back. There's a very, very big problem in the agricultural space. There are a lot of institutions and also government agencies that collect data from farmers. You'll find that these data are in silos. They are collected, they are used by individual companies, they are not made public. So when you try to build something in the agricultural space, it becomes a problem because you have to start from scratch. You have to collect your own data that has already been collected by another institution or another organization for you to build a base for that. So this is a challenge that we experience because across other sectors, it can be very, very easy to get data because data is very easily available. You can just use something like sort of a CRM. You can collect data from everyday activities, but you cannot do that in the farm. So we
Sorry.
use
To add on that,
yes.
One of the people, I recently had a conversation with one of the microfinances,
Yes.
I think in Tanzania, and he pointed out the same problem that in the microfinance space, they're trying to give credit to the small informal business or people, and they also have the same problem because each microfinance has each certain collected, so you can see one person going to lend from this microfinance and jump into another, and they cannot even know that this guy came here from here. So I understand.
Now here the problem that was there is that you can have self-reported data. You can use self-reported data, but how reliable is the self-reported data? That's another problem that you encounter in the agricultural space, because if you use maybe data that let me just say that the quality of the solution is dependent on the quality of the data that you collect. So for us, we have a data collection tool that is being used by field agents. We collect data across different we collect data from circles that the farmers are already part of, because we onboard farmers through circles because of the trust that they've already built with the smallholder farmers. So the circles share the data that they have on the farmers. That's just transaction data, the KYC, because they know the identity of the farmer, they know the activities that the farmer undertake. We also have field agents who use our digital data collection tool. The digital data collection tool is just to collect the data. There's nothing special about it. But there's some aspects of the digital data collection tool that helps the field agent, because it can flag data that it's an outlier, because we already have this data that's collected from the circle or the cooperatives. We have data, or we have satellite data that is now used to enrich all these other data points. So using satellite data, that means that we can see the size of the farm, we can see the crop that is being grown, we can estimate the yield. So when the field agents go to the farm, what he's doing now is just to kind of verify the data that you already have. He'll collect additional data, but there are some overlapping data points that will be used just to verify. For example, maybe we can ask, how many bags of maize do you take to the market per season? And then you can say something like 50. But from the field size, you can see that this field size cannot cannot maybe produce 50 bags. So that can be flagged. So it's just a combination of these different platforms. Collaboration is key, because for the circles, they share the data, they have the trust, they have already built the trust, so they know more about the farmer than us. So they introduce us to the farmer. They give us the first set of data that is used now to create the profile, and then we enrich this profile with these other data points that we collect from the farmer directly, and then we enrich it with geospatial data that from the satellites. For us to have this high quality data, we have to go to the field. This scale will try to digitize it, but you have to build a base. Let's say, for example, people say that there's AI right now. Those are just big names, but AI must be built, because there's no AI that is now trained with the Kenyan data. We have to build our own AI using the data that we have collected from the field. So maybe once we build this base from, let's say, 200,000 farmers, 300,000 farmers, we can have kind of an algorithm that can be used to validate the self-reported data that we're getting now from the farmers. But for now, we have to have all these platforms to collect this data for us to have quality data to build our solution. Yeah.
Okay, that's really nice. Yeah, I think we're really far behind from the I think the AI race. Like everybody's is really talking about it, promoting about it, and making campaigns about it. But in the reality of things, I mean, good AI models are built by good data.
Yeah.
Sadly for us, we don't really have the data to collect and analyze. So I think there's a lot of groundwork that needs to be built to create these rails, these data points, these data silos, as you said.
Gotcha.
Okay, back to the data, because I'm really interested in the type of data that you're trying to see, because that really defines your business, that really defines the success story of what you're trying to do. So what type of revenue data, how do you collect the revenue data? You talked about M-Pesa, and I just want to see how do you, because listen, of credit is this guy making money?
Yeah.
Okay, I know you're producing about 50 bags of rice, 50 bags of maize, but are you actually making money? That's really the basic decision making factor, if I give it. So how do you actually consider that?
Now that goes to it's a little bit technical on how we approach it. We get data on production. We get data on the amount of produce that they take to the market. And then we look at M-Pesa statements. Now from the M-Pesa statements, we can generate up to around 12 data points from that. What we do for the score that we generate, we do not incorporate all the data points that we collect from the farmer. We have a total of 39 data points that we collect from each and every individual farmer. But what goes into the score is not actually, as I was highlighting earlier, is that we collect a total of 39 data points from each and every individual farmer. Not all the data points are incorporated into the score. We do a lot of feature engineering, mechanization.
What do you mean?
Engineering. And then we generate signals from all these data points. You'll find that up to 10 or 12 data points can give you only one signal. So let me put, for example, let's look at what you're talking about, the revenue part or the cash flow. So for the cash flow, we can look at all these data points that are collected from the M-Pesa statement. We get the farmers share the M-Pesa statements but after consent. So consent is very, very important. The consent is given at the data collection point. So they have to consent to sharing the data before they give us now the information. And it can also be revoked. That's something that I learned while we were doing our pilot, because somebody can share the data and then later on they can change their minds. So all that can be must be incorporated in the system. So once they share this, we generate a total of 7 data points from the M-Pesa statement. And then we have the production. You have the production that is reported, the amount of produce that they take from the farm. That's another data point. And so we have the amount of produce that has been recorded now by the circles and cooperatives. For example, for the dairy farmers, you find that every time they take their produce to the market, they sell to the cooperatives. So that means that the cooperatives have the amount of produce that the farmers sell on a per cycle. So all these can be used. There's a lot of feature engineering that goes on, and then all these can be used to generate one signal, which is now the cash flow or the revenue that you're talking about. So,
okay.
Because there's fragmented data, because there's limited data, the data is all over the place, you must find a way to make it consistent. Because you can find that out of these 9 data points that generate the cash flow of the farmer, you can find that maybe one farmer lacks 2 of them. So what will you do in that one? So you can use the other 7 to generate the same signal that will have been generated by the 9 data points. So there's a lot of feature engineering that goes into it to come up with these signals that now informs the credit score that you're building.
Okay, that's really nice. Yeah, that's really amazing what you try to do. And how long have you been doing the business, and how's the business so far? What's the size of the market that you're guys operating in, and just give me the business side of what you're trying to do right now.
Okay. Maybe into some statistics now. Find that agriculture, let me give you the case study of Kenya, contributes around 22% of the GDP, the Kenyan GDP. But when you look at the 22%, that's according
22?
to 22%.
I think it's more in Tanzania.
It's more in Tanzania.
Yeah,
but if you look at the financing bit, you find that agricultural loans that go towards agriculture, it's only 4.4% of the entire loans, the entire loan books of the financial institutions, banks in particular. Why the gap? 22% of GDP, only 4.4% of the bank loans. So that's the gap that we are trying to build our solution into. You'll start asking yourself, why is this gap there? Why is there the gap? It's lack of trusted and verifiable data that can be used to assess the risk that each and every farmer carries. The size of the market is quite big. In Kenya alone, we have an agricultural financial gap of around 65 billion. 65 billion, that's Kenya shillings. I don't know, maybe I can do that math in USD. So that's per year, that's annual. If you look at this, that gives us a very, very big market that we can operate into. For the business, we started building 3 years ago, but much of the time was meant now for the technical bit and market analysis. We took quite a bit of time in researching, doing researches on what the farmers need, what the financial sectors need, what the circles need, data points. There's a lot of things that we have done on data points. So it took roughly 2 years to come up with the MVP. We had our algorithms. Now we went into the market to do pilots. For the piloting, we started off with the dairy sectors. Another thing about agriculture is that different value chains have different data points. So you cannot treat all these value chains the same way. A coffee farmer is very different from a tea farmer, is very different from a dairy farmer, different from poultry farmers. So you have to treat them uniquely. You have to treat them differently. So we went to the market. That was 1 year ago to do our piloting. We started off in the dairy sector because of the short income. When that the dairy sector, the farmers take their produce every day. They produce to the market every day. There's a milk. They take milk. You find that some of them sell in the morning, in the evening. Some of them sell every 2 days. So it was very easy to get that data from them. We scored around 6,528 farmers in the dairy sector.
Farmers? Yeah? Dairy farmers, you said, yeah?
Yeah, dairy farmers. 6,528. And
how
then
long did it take?
6 months, a period of 6 months.
Wow.
And then we partnered with 3 circles, which operate in the dairy sector. And then 2 of these circles, they agreed to test our solution. So they gave loans to the farmers, short-term loans, 3-month and 6-month loans. And then we monitored now the repayment rate. From the repayment rate, there was a 39.4 increase in repayment rate, which was quite substantial. But now, given that we were starting, I can say the quality of data was not that top notch. There's a lot of changes that you have made. Right now, we are approaching 13,000 farmers. We have gone into tea, we have gone into coffee, we are looking at potato value chain. So we are in conversation to go into horticulture and also maize and sugarcane. Those are our targets this year to own. their interest and maybe market response is quite positive, because this is something that cuts across board. Financial institutions have shown interest in the solution that we have. Top tier banks that we are in conversation with. We are almost finishing up. We are almost signing off, and it can be very, very beneficial in our journey.
Okay. Just to add up,
Yeah.
I really want to just go back.
Yeah.
Can you walk me through your business models? How do you make money out of it? What type of partners do you support? And you're talking about financial institution, but what really type of financial institution are you giving this data to? I really want to understand that part of the business.
Yes. Once we collect the data from the farmers, we generate a score, and then we do not only give the score to the financial institutions. There's a score. We have risk bands. We also have explainability. We have to give them context on how we came up with the score. And then we have to give confidence levels, because you can find that a farmer maybe has a low score, but maybe the confidence in the data that was collected was a little bit low. So we have to give them confidence. So this holistic approach is just to give the financial institutions a very clearer picture with a particular score. And then it informs now their decision how to give out the loans to the farmers. We also give them recommendation of the amount of money or amount of the loan that a farmer is able to pay. Given them, then we recommend tenor. That is maybe 3 months, 6 months, 12 months. Things like that. Maybe a farmer wants to buy inputs. Maybe a farmer wants to do 1, 2, 3. So we have to direct that towards a particular direction. So it's up to the financial institution now to make the final decision on loans. We just help them make this. We are not there to replace the credit officers. We are not there to replace the risk officers. We just help them to make this informed decision. So that's our main offering. We also do monitoring after loan has been disbursed. We do data refreshes, which includes loan monitoring. We have to look at the repayment rate, and then we have to adjust the score according to the repayment rate of each and every farm. So the financial institutions that consume our products are banks, circles. I don't know if you're familiar with circles.
Yeah, we have circles.
Oh, okay. Circles and cooperatives. You find that circles are farmers they work with farmers, but most of these farmers are not eligible for loans. And then you can ask yourself, why is that the case? Because the circles, they have the farmer records, they have all this, they have savings, things like that, but they still need farmers to have some bit of collateral. In Kenya here, you find that for a circle to give a farmer a loan or a credit item, he has to have another farmer within the circle to act as a guarantor to the loan, which is not supposed to be the case. Given that you have all this information, you can clearly assess the ability for this farmer to repay. So the circles, the microfinance institutions, banks, and development finance institutions, we have to look at the bigger picture. Problem cuts across board. It's not only the financial institutions, even large organizations that want to maybe give maybe irrigation equipment to the farmers. They want to give maybe loans to other institutions so that it can now be given to the farmers. They don't have this data that can clearly inform
even private capital.
Yeah,
I stand right now. I'm really trying also to build like a capital pool to really invest into different entities. Like agriculture is really one of the most profitable business. The problem relates to the risk, because we don't really know. And I think people like you can really help people like us who are trying to mobilize capital, and we can deploy easily to programs like yours. So I really see it.
Yes. Even private, that's very good. Even private capital, blended finance, all those can plug into the solution that we have. Now for the business model, we do subscriptions, because we have all these farmers, and then we'll need let me maybe correct something. For the financial institutions, let me say, for example, the banks, we find that some banks have farmers already in their ecosystem, but now they have farmers within the ecosystem. They have loan that is structured for these farmers, but now the farmers cannot access these loans. Just it goes back to the credit assessment and risk assessment. So if we find such institutions, they introduce us to their farmers, we score the farmers, and then they have to pay for every active farmer within the portfolio that they're serving, within their ecosystem. So it works for a platform, for an intelligence platform. You have all these partners. You have the circles, the cooperatives. So some circles will allow you to share the data of the farmers with other institutions, but some are very, very protective of the farmers that are within the ecosystem. Well, that's also something that we consider. They have to subscribe to our platform for them to monitor the number of farms that we have scored within the ecosystem. So if they want to access maybe 100,000 farmers, and then these 100,000 farmers they're the ones that introduced us to, that is acceptable. If they want to access extra farmers that are within our ecosystem that were shared by other institutions, that also it's arranged, but they have to pay for the active farmers that they are engaging in the ecosystem. We also do API, pay per API. There are those institutions that already have their systems in place. So what they need, they just access our solution through APIs because they don't want the complexity of integrations. So they just do per API, so they have to pay per API call that they make on our system. So that's how we make money. We also have the monitoring bit, because you cannot build a portfolio without monitoring. A score can only be used once, but what happens after now the farmer gets the loan? The financial institution has to maybe consider the repayment rate, because what if the loan was delayed? What if there was late repayment? So we do the monitoring, and then we do data refreshes based on the monitoring bit. We charge something later on data refreshes because agriculture is seasonal. So what we learned is smallholder farmers in Africa, they change their minds quite often. The primary crop that a farmer is producing is maize on this season. But when you go to the same farmer for the next season, you find that they have shifted. Now they have coffee. Those are things that you must consider. You must do these seasonal refreshes for you to have fresh data that can be used now to inform decisions. Because you can find a farmer, maybe this month, the credit score is 743. You go next month, maybe there was some bit of shock, there was climatic shock, their produce reduced, things like that. So all those must be put into place. So that's how we make our money. It's just subscription, API calls, data refreshes, they pay for things. So.
Okay, nice. Have you broken even so far? Are you in a profitable scale now?
Not yet. We are past piloting. We are moving into commercialization, which is the most, I think, that's the most challenging part of building, because now for the piloting, maybe we are using our personal savings for that. Now, for you to shift from the piloting bit now to commercialization, you need scale. How do you scale? Now that's where now the resources are needed. So we are at that point, because we have these interests. We have this interest, some paying customers, but it was just piloting for a limited number of farmers. But now we have this financial institution. For example, one financial institution has access to over 680,000 farmers. They wanted to score all these 680,000 farmers. How do you do that at scale? That's the transition point that we are currently into. Post piloting into commercialization.
Okay, so yeah, thank you so much for like giving me some insight on what you're trying to do, and it's very, very interesting.
Yeah.
Just as we're about to finish, I really want to understand, what do you think you're saying that these financial institutions are not seeing to these farmers?
Oh, okay. Yeah, it's very, very simple. The problem is the fragmentation of data. Data is fragmented. It's across different platforms. We have, for example, in Kenya, we have M-Pesa, we have the production. Nobody even records the production of smallholder farmers. If we can have a system that all this data is recorded, everything can be easier. But unfortunately, we don't have that. So that's what now Mkulima Score is coming in to do. We want to have a holistic view of each and every farm. Let me tell you an example. We found out that not very many farmers, very small number of farmers monocrop in Kenya. Monocropping in that very small number of farmers only have one crop.
They multiple crops.
A typical Kenyan farmer will have maize, coffee trees. They'll have a backup somewhere. They'll have some poultry that they have, and they have cows just to do dairy. It's just that's how most of the farms are structured. So if you have a financial institution trying to look into this farm, you find that maybe they're considering as a coffee farm. That's the only value chain that they'll maybe structuring around. So they look at his or her coffee produce. There's a lot that this farmer does. That there's a lot of data points. There's other cash that is being generated by this farmer from these other value chains, from these other activities within the farm. Financial institution has no capacity to see all this. So that's what we are there to do. Data is fragmented. There's no system in place that can have this data be structured in a consistent manner that can be used by this financial institution. So that's the gap that we are there to fill.
Okay. Nice. Okay. Listen. We're talking about banks. We're talking about very strict financial institutions, and they're very strict about the procedures, the KYCs, and all of stuff. So how do you do to convince them to believe in your score? Because as I say, this is your type of data that leads to a financial decision. So it's a very sensitive process.
Yeah.
So how do you do to convince them?
Yeah, that's a very good question. One, data governance. From the onset, from the time we are collecting data, we are so keen on data governance. We are so keen on consent. We are so keen on data quality. So the type of data and the data that you're collecting has to be very high quality. That's why we have our field agents, trained field agents to collect. We have a field agent show is used by the field agents. It's not used by the farmer. We do not rely on self-reported data. We can have self-reported data, but we treat it as provisional that is subject now to verification and validation. So data governance is one of them. We have to be very keen on security, data quality, things like that. Another thing, to build trust. You have to make the financial institution trust the data that you're giving. That's why we are not only giving them the score. If you give them a black box model, that they cannot trust this model. They don't know how you came about this model. So we are trying to be as transparent as possible. We give reason codes to financial institutions. For example, maybe Ephraim is a dairy farmer. We have collected data from him. We have a score of 743 out of 1,000. We have to put some bit of context in how we got to the score. Maybe Ephraim takes 24 liters of milk to the market on a daily basis. Maybe your M-Pesa cash flow is very, very consistent. So we have to tell them that. Maybe your vegetative index supports the the value chain that you operate in, index, things like that. We have to give them that context. We also have to give them confidence level, because we have confidence levels in the data that we collect. It's not confidence of the farmer, it's confidence of the data that you have. So maybe you have a score of 743, but out of this 743, the confidence level, I was telling you about the context. So you have to, we give reason codes, we give confidence levels, we give recommendation on the loan, the exposure, and then the tenor, just to give them some bit of confidence in the score. So it's not a black box. We have to be transparent for them to trust this data, because trust is very, very important. You can have this score, but how can this score be used to inform a decision, a lending or a lending decision? Those are what we try and use for that. Another thing that we do in this respect is, which are very, very important. We try to collaborate with institutions that can give us credibility. For example, right now we are collaborating now with the Food and Agricultural Organization of the UN, geospatial analysis. They're helping us with the geospatial analysis part of our solution.
What's that? Sorry, what's geospatial analysis?
Geospatial analysis is just satellite data. Once we collect all this data, we have to enrich it with satellite data. So on the satellite data, we have to have some variables that are tied to that. For example, we have to look at the vegetative index. We have to look at the climate index, because agriculture is affected by climate. There's a lot of climate volatility that happens in the agricultural space, and they affect agriculture in a very big way. So we have to put those indexes into place. They affect the final outcome of our solution. So these collaborations, they give us some bit of credibility. For example, for us, we had FAO validate some of the scores that we had, just to validate our model, which was very, very positive. So these are things that can be used as maybe credibility tools when you're approaching these financial institutions. But it's not easy. It's not easy to have the financial institution trust your score.
Yeah.
For our approach, we'll go through the circles first. So through the circles, we can validate. We can validate what you have built. So we onboard through circles. We tell the circles, introduce us to these farmers. This is the value proposition that you are bringing to you. This is the advantage that we will be giving you. But you can test this. You can test this solution for free for a limited number of farmers, and then if you see the impact that it has, now you can now buy it at a discounted rate. But we have the circle now. We have the evidence from this. We can use this evidence now to approach the bigger financial institutions.
So what needs to be done for I think your business to scale right now? What currently do you need for scaling? Is it to improve the product that you're having? Is it to reach a lot of customers? Is it to validate your score? Is it to get more financial institution? Like, what's your next step that will take you to the next level?
Yeah, a lot, but the main thing is funding. We have to onboard the farmers before.
Are you actively raising capital right now?
Yeah, we are actively raising capital.
How much?
Oh, we are raising 600,000 USD.
Okay, and what is it?
Yeah, for farmer onboarding and field engagement. We also want to improve now our technical architecture and our capacity, technical architecture and capacity, and we want to use it for engagement for SACCO and financial institution, but mostly is to strengthen our architecture and field engagement. Once we onboard the farmers, now the farmers become our assets. Now you can have all these institutions come and plug in, then they can pay for the solution.
Yeah.
Collaborations are also important, from the financial institutions, from the SACCOs, from development finance institutions. those sorts of collaborations are very, very much open. Those can help us scale in a very, very big way.
Okay, nice. And you say 600, is it debt or equity? What form are you trying to?
It's mixed, both debt and equity.
Okay, nice. Okay, man, I think I've learned a lot from you. Thank you so much for having me and taking your time from your busy schedule to have a chat. Yeah, man. Do you have any last words? Do you have anything to say?
I love the idea. I love the idea that you have. Maybe if I can ask a question first.
Yeah.
Are you focusing on the agricultural sector or SMEs?
So for me, I'm really focused in financial inclusion. Any initiatives that really help people get credit, people get savings, people get insurance. People, this means very smallhold, maybe farmers, people who are very informal, and they're trying to formalize them by data collection, by data transformation, and essentially that's the area that I'm trying to because for the past few months, I've talked to people in the West Africa, and what they're trying to do is really bring credit to this small, small businesses, small retails, the small mama shops, and also I told you in East Africa, I have talks with this guy who's really trying to use the border ecosystem to help give the border people insurance and give them financing. For me, I'm focused on that area. So anybody who's really trying to get this informal, undocumented people into the scale of cheaper insurance, cheaper credit, cheaper financing, I think I'm interested in that. And also, I'm trying also to raise to create like a capital fund that will come to essentially maybe provide capital to institutions who are actively doing that. So also that's why I'm trying to go out there, meet amazing people like you, and to see what's out there in the market.
Yeah, thank you. That's very good. That's very good. Africa needs financial inclusion because most of there's money out there, but it doesn't reach the last mile. So we have to put systems in place that can make these finances reach the deserving and the underserved. So that's very, very good. So,
but the problem is, I'm talking now about the capital allocation part. It's a very tricky situation because sometimes we're more focused on the social impact, but we tend to forget that this is money being deployed, and people when they are trying to find ways to get it back. So to you people who are building, I think the story to really show how are you really helping the community is good, but how is it profitable?
Yes,
because the story can be inclusion, the story can be helping a small mama shop get better credit, insurance, but the really big picture, people come when the books are interesting. So I think it's a challenge to you guys who are active in building to really think of it in a way of, okay, I'm really into the market to help people, but you need to make money out of it.
Yeah, true. That's very true. Hopefully we'll connect after this, and then we can keep the conversation going, because those are the things that we are also trying to solve now within the agricultural space here in Kenya. So maybe for the closing remarks, the opportunity in African agricultural finance is not simply in digitizing the existing exclusion. That's what most of the institutions are currently doing. I think the opportunity is to redesign how productive activity is recognized and verified and also financed. So at Mkulima Score, we believe when a farmer's activity becomes visible and understandable, lenders can make better decisions, farmers can access more appropriate capital, and agricultural markets can grow more sustainably. What you're building is an intelligence layer that helps make that possible. I would welcome conversations with banks, circles, agricultural financial institutions, development partners, investors who also share the belief that Africa's farmers should be assessed based on the credible evidence of their economic activity. They should not be excluded because evidence has been historically that evidence is not there. It has been excluded historically. Yes, I really appreciate this opportunity. It was very good hearing from you. I think we need such platforms as builders. Somebody said that the problem with Africa is that we build that, but you keep it to yourself. So that's a very, very big problem. These platforms that we can air, maybe what you're doing, the challenges that you're facing, it can help even other builders do something better than what we are currently doing, and it can help improve the overall ecosystem that we are operating into. So I really, really appreciate this. Thank you.
Oh, thank you so much. Okay, so for closing, what is better, chapati or pilau?
That's very subjective. Chapati is better, but chapati is better. It's an everyday meal. I think pilau for occasions, chapati every day.
I think okay, I'm Tanzanian, and we eat chapati and pilau, but you guys, you are abusing it. Pilau with burger, a pilau with a pilau with ugali. I mean, you guys are really I'm really abusing it. Okay, man.
Yeah, thank you. Thank
Okay,
you.
thank you so much.